presentation contains current opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Moe's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Moe.
Hello everyone, and welcome to the Market Wrap YouTube update for September the 10th, 2021. I'm Moe Ansari, President of Compak Asset Management and host of Market Wrap. Thank you for joining me for this update on YouTube. I'll talk about where we are as far as the markets are concerned, where I think we're headed. We had a little bit of a pullback this week, so we will take a look at what the market is trying to tell us. But today is the 10th of September 2021. Tomorrow is 9/11. 9/11, a day that'll live in infamy. It's seared in our memories. Everyone remembers where we were. I remember I was in Scottsdale getting ready in Arizona to do some updates and meet some clients. And someone called me and said, turn on the television. I did, and I saw the planes going to the World Trade Center. And I thought about that for a minute. And I said, yeah, I think we better cancel all the meetings for the day. Our lives have changed. We're never going to be living the way we have. Everything is going to change from this day forward. I called up America West. That was in the airline that got bought out by U.S. Airways, and then now it's merged with American Airlines. Doug Parker used to run America West. Now is the president of American Airlines. So I thought about it. I called America West and I said, I know there's some problems with the airplanes and airplanes are grounded. She said, no, don't worry. The airplanes are grounded. There's more. They'll be flying by this afternoon. I thought about that for a minute and I said, I don't think so. I don't think she knows. She's thinking about the gravity of what has just happened. And so I went to the car rental. I rented a car and drove back from Scottsdale back to California. It was about a 6-hour drive. I was thinking about all what was going on, listening to the news, and everybody was talking about all the different attacks and how there would be more attacks coming through. And I thought about that. I brought the rental car back to the car rental place, and I was trying to get in, and there was this huge crowd of people standing there. And as soon as I walked in, they said, oh, I'll give you $1,000. Just give me the car. And I said, what's going on? They said, the planes are grounded. I need to go to Scottsdale. I need to go to San Francisco. Someone had to go. I just want this car. And I said, look, how about if I do this? I turn it back in. Whoever's next in line will get the car. So everybody was trying to get somewhere. And as we know, the planes and the flights were grounded for about a week then. But it did change us. It changed the way we live. And I think that's the same thing that is going to happen pre-pandemic and post-pandemic. This pandemic, as I've mentioned it, it's an endemic that we'll have to learn to live with. It's going to be here for a long time to come. It's going to be like the flu. Every year we get a different variant of the flu. I think we're going to get the same thing with the coronavirus. We'll get a different variant. But as long as we're vaccinated and get a new vaccination shot every year, I think that's going to be how we're going to live. We're going to mask up. We're going to social distance. We're going to be more cognizant of our environment. I think that's what we are. The reopening, on the other hand, is going well. We have come back up. We are at 95 now on the reopening scale. We were at 100. This is pre-pandemic. So we've come all the way back. We are getting back to some kind of normalcy. We did get this huge spike. This was the Delta variant, but now it's starting to turn back down. As I'd mentioned a couple of weeks ago, I thought that we would go the very similar route as the UK did. It saw a huge spike, and then it turned down sharply and it faded away. I believe the same thing is going to happen as more and more people get vaccinated, more and more people unfortunately get infected. We are going to get to that 80-85% herd immunity where there will be people who are vaccinated and people who have natural immunity because they had COVID, and that's where we are going to end up. We still are a couple of months away from that, I feel. That's where we are right now. We're looking at the fight going on for the mandates and the masks and the unmasked, but we're looking at the mandated in schools, and you can see the darker ones, the states, they've mandated masks. Some of them have banned the masks, so you cannot wear a mask in school in some states. And then there's some states, as we know, are fighting right now in court. So it's a hodgepodge because schools are regulated by the state and the local governments. The federal government does not have any control over local schools. That's the way the laws are written. So for kids to wear masks, to not wear masks is mandated by the local school district. In California today or yesterday, they mandated everybody has to be vaccinated. all the kids age 12 or over will be vaccinated. I believe there'll be lawsuits and all of that, but we are going to come to the conclusion that, vaccine is necessary. It's like polio, smallpox, diphtheria, all of these things that kids have to have these vaccinations before they can go to school. The COVID-19 vaccine is going to be one of those that you'll have to prove that you're vaccinated to be able to go to school. Unfortunately, we're seeing a tremendous amount of pediatric cases where kids under 12 are getting infected now. We're seeing hospitals being inundated with young children, and that is, I think, something very sad. They're getting it. It was the regular COVID was not as contagious for the kids. It is still very contagious for the kids, but again, it is still, thank God, not as fatal as it is for older people. But there are lots of kids that are getting very, very ill because of COVID. We are expecting that in the next 2 or 3 weeks, we are going to get the Pfizer vaccine is going to be approved for emergency use for kids between 5 and 12. That will basically give them the right to get vaccinated if they want to. And I think we're going to move in that direction slowly but surely. We have seen the spike in the virus. As you can see, it is regions where we are not seeing the vaccination rates very high. This is the South. All the states in the South that the vaccination rates were low. They hit a peak and now they're starting to roll over. Thank God for that. This is the West, this is the Northeast, and this is the Midwest. So we saw all of this. This was the unvaccinated areas in the country, and that's, again, a choice that people have made. But unfortunately, it is affecting all of us, because if we do see COVID spread again, the Delta virus, we're seeing cancellations in airlines. We hit a peak here in all airline spending, and we've seen that turn down. So businesses have cut back again on travel. We're starting to see consumer recovery, which hit a high in February, is starting to fall off now, as people are saying. I thought this was going to happen anyways. I talked about this a couple of months ago. We had so much money saved up that everybody wanted to go on vacations. As we got to September, we'd get into some kind of normal routine as the kids went back to school, and we cut back on travel and expenditures. We're seeing that, but unfortunately, that has been exaggerated, the slowdown, because of the Delta variant. How big is this slowdown going to be? As I said a couple of months ago, I think we're going to get some wobbles in September. Usually, seasonally, a very weak month for the market, the worst month from a seasonal perspective for the market, and we are seeing that now. Also compounding that with the taper, and I'll talk about that in a minute, we're looking at social distancing, the card spending. Well, it's sort of stable right here. It has not really had a big impact. You look at the vaccination, we are seeing mandates now, companies requiring that employees have to be vaccinated to come back to work. And I heard that the president is talking to the Labor Department, where the Labor Department is going to mandate anybody who's got more than 100 employees, any company will have to have a vaccine program in place, or all the employees have to be tested that are not vaccinated at least once a week or twice a week or whatever it may be. So as we move towards the vaccination, or the herd immunity, as it's called, 85% of the people who've got vaccinated all had the virus. We are going to get to that herd immunity sooner or later. We're moving towards that. If you look at that initial jobless claims, they've come way down from where we were. They're still higher than the pre-pandemic levels, but they are down to the lowest level post-pandemic. Since the pandemic, this is the lowest level of people applying, new applicants for unemployment. Continuous jobless claims are still high, but they're starting to come down. And most of the other numbers are getting towards where they were pre-pandemic. So we're coming back, slowly coming back to a new normal, which is still going to be slow. One of the big things everybody's looking forward to is the next meeting of the Federal Reserve, which is scheduled for September 22nd. The expectation was that they're going to announce how they're going to cut back their bond buying program. Now they are going to give us some details, but I don't think they're going to give us exact timing and the composition of what it's going to look like. I believe now, with the weak unemployment numbers that we got last Friday, that the Fed is going to wait till their November meeting. In the November meeting, they will have data from the September unemployment numbers and October unemployment numbers, so they will see how unemployment is coming down. That's what is the main criteria, as they have said, that before they start cutting back on the amount of money they're putting into the economy, which is $120 billion a month, $80 billion in treasuries, $40 billion in mortgage-backed securities. But the expectation is they're going to announce it in November if the unemployment numbers look good, if the economy continues to maintain, or at least maintain its momentum, not lose momentum. That is where we are now. And I think we are going to maintain the momentum, even with the Delta variant out there. I think that is going to, the next couple of months, fade away, and we are going to come back. Looking at the market, we have made, everything moves in 5 waves, where we get wave 1 to the upside, 2 to the downside, 3 to the upside, and then 4 correction down, and then the 5th wave top. Everything moves in 5 waves. Once we get to a 5th wave top, we usually get a rollover. The target was around 4,600. We got to about 4,500. That's the long-term target. 4,440 was my target. We got a little bit above that. Now we've come back and broken below the 20-day moving average. Today we broke below that. It is at 44.35. We closed at, or 44.65. We closed at 44.58 today. Now next support is going to be the 50-day moving average at 44.25. If we break below that, then we have a little bit of support here, which is last month's low at 43.67 for the S&P 500. Break below that, we look at 42.70, which becomes the 100-day moving average. So we've started a pullback. How far we're going to go, it depends on what the Fed does and what the Fed announces, how we get the data from the economy, how much it is slowing down, and how much Delta variant is impacting the market right now. Looking at the weekly charts, we saw wave 1 off the March pandemic low. We had a little bit of a pullback, and then we've been in wave 3 to the upside. If you start wave 4 on the weekly charts, we break below 44.35, which is a 20-week moving average, then we long-term target becomes 41.75, around 4,200. Are we going to get there? Will depend again on what happens to the market, what happens to with the taper, how inflation numbers come out over it's all data dependent at this point. The economy is doing well, companies are doing well, but we do have bottlenecks in supply chain problems where we can't get enough containers, we can't get enough ships. China shut down for a period of time. Now there's so many ships standing in our ports waiting to be unloaded. Once they unload, they've got to get them on rail cars or trucks, and we've got a shortage of all of that. So once we get all of that, I think it's going to be a couple of months, but this is the critical time to get the products out here for the Christmas shopping season, which is only a few months away. But right now is where most of the retailers start to restock and get ready for the biggest season, retail season. And it will again depend on how COVID goes, how Delta goes, and how much supply we can get into the economy. Looking at the NASDAQ, we are still above the 20-day moving average, which is 15,034. Then the 50-day is 14,835. And if we break below that, then we got a little bit of support right here, which is around 14.4, last month's low. And then we start looking at the 200-day moving average. And that would put us down from about 15.4 was the high, about, somewhere around 1,500 points to 2,000 points lower than the high. And that's a major pullback. Pullbacks are 5 to 10%, corrections are 10 to 20%, anything beyond 20% is a bear market. I expect this to be somewhere in the variety of a pullback. Usually we get 2 pullbacks a year of 5% or more. We have not seen a 5% pullback in the market since last October. So the market is due for some kind of pause. It's like the runner that runs for a long period of time. They have to slow down to catch their breath. That's what I think the market is going to do. There's still a tremendous amount of cash out there that wants to come into the market, and the alternatives are very few. There's very few alternatives than the stock market right now. Looking at the weekly chart for the NASDAQ, again, 14,300, that's the 20-week moving average, and the 50-week is around 13,432. Looking at the upside, is 16.4 is the weekly target if we see an extension of wave 3. I still think the market is headed higher from where it is now. By the end of the year, it will be higher than where we are now, but we could see some more pullback here in the meantime before we start another leg to the upside. A lot will also depend on the new infrastructure plan. There's a $3.5 trillion. $1 trillion is already approved. That's a hard infrastructure. Now, the Democrats want to do the social infrastructure, which is $3.5 trillion. How much of that? I believe that they will whittle it down to about $2 trillion. That is still a tremendous amount of money. The question is, how is it going to be funded? Whatever the number is, that the number is. We can talk about the politics and the socioeconomic impact. That's different. What I'm looking at is the economic impact. A $1 to $2 trillion package and how that's going to be funded. If $1 trillion comes from taxation, corporate taxes going up from 21 to 25. We are seeing capital gains taxes going up a little bit. That would be okay. I think we can live with that. Taxes for corporations came down to 35 to 21. So if they go up from 21 to 25, I don't think there will be. So what that is, how much taxation is there? If it's a little bit, about $1 trillion in taxes, trillion in deficit spending, I think that would be, market can handle that. But if you get more taxes, it will be like a brake on the economy. So those are the two things I will be watching over the next few weeks. How does the taper go? What does the Fed say about taking away some of the bond buying program? And then also looking at what is going to happen in Washington. I'm just looking at it from an economic point of view, that if they do raise taxes too much, that is going to be a brake on the economy, consequently a brake on the market, put some brakes on the market also. I still believe that they're going to do more deficit spending, but when they're issuing, just printing money, issuing bonds, and do deficit spending, sooner or later that is going to become a problem, and inflation could become a problem. But both of these programs, the hard infrastructure and the social infrastructure, does not give money directly to people like we were previously in the pandemic, where checks are being sent out to everybody's mailbox or their checking accounts. This will be spent over the next 5 to 10 years. It does not all come to the market or to the economy all of a sudden. You can't build a bridge tomorrow morning. You have to have the plans, the permits, and that get the materials. It takes a while to get infrastructure done. So it will be a long-term process. So all the money does not come all the way into the economy. So I don't think it's as inflationary as the pandemic relief programs were. Looking at the gold chart, it has been very disappointing. We saw interest rates come down. We saw the dollar back off. We saw the bad unemployment numbers. We saw the problems in Afghanistan with the withdrawal. Gold ran up for a couple of days, got above the 200-day for a couple of days right here, but then it fell right back down, and it's even below the 50-day moving average. We have to hold right around here, around 1775, but if we break that, then again, 1675 becomes the next number. Gold should be going up with all the geopolitical stuff that we've seen, all the slowdown in the economy, but gold has not got anywhere. And that's why I don't have it in our portfolios, where I've kept it out for the last few years, even though I like to have gold, but I have not had any in our portfolios. One economic market that I'm looking at is the Russell. That's the small cap index. I believe that really represents the reopening trade. Those are small businesses in the United States. Those are not that are on the internet. And it has been stuck in a range between 2360 on the upside and about 2100 on the downside. That's what we've seen since the beginning of the year. If we can break out above this number, 2360, I think that could accelerate, and it will confirm to me that we are firmly getting past COVID, or at least the initial shock of COVID, and we're learning to live with it more and more, and our economy is getting back to some kind of normalcy. But we went up there again over the last week or so, and now we've fallen back down. That was the optimism that we were feeling a few weeks ago. Now we're feeling a little bit of the pessimism because of the Delta variant. I think as we get the next couple of weeks, get a better handle on that, that'll give us a better look at the economy. Looking at the again, this is the weekly chart, stuck in 2360. Long-term targets are much higher. I feel that if we can break out above 2360, the small caps could be the one that could really propel the next wave up in the market. The large caps have done very well. As we all know, the Googles and the Facebooks and the Amazons of the world, Facebook and all of those. But, you know, we have to get the small cap. That's where the jobs are created. That is the engine that drives the U.S. economy. So I'm looking at the Russell and keeping an eye on that. If that will show me that we are firmly in the reopening trade. Don't forget, I'm going to the biggest webinar of the year. That'll be on October 13th at 6 p.m. It's a live update where I'll look at the Q4, what to expect in Q4, what happened in Q3. It'll give us a very good idea what to expect for the rest of the year. The registration and the description is below. Just click on the box below and you can register today. That will be on October 13th. It's a quarterly webinar where I go through all the charts, all the graphs, the economic updates, and the technical views. And it's about an hour and a half, and I will try to answer as many of your questions as I can. Thank you again for joining me today for this YouTube update. I'm Moe Ansari, and I will be back in a week. Until then, good trading.
This presentation contains the current views and opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.